What's going on, guys? It's Marcus from Wall Street Assassins, and in this video, I'm going to teach you how to stay consistent in the stock market, right? So we're looking at ticker AMD. This stock has been an absolute monster all day, running all day, just because they came out with news saying that they have a new partnership with Twitter, and they're going to be buying more of their products and stuff like that. So this stock has been running all day. It really didn't give too much chance of entry just because of the consistency it had of an uptrend. So my students and I, we're in the group chat. We're looking for a possible entry on the stock. I actually got in at 11:56 right over here. See the MACD had crossed over. It's in the bullish territory on the MACD. So I got in anticipating for the stock to go higher, but we didn't get that, right? So now, how do you stay consistent in the stock market? Well, you stay consistent by doing your support and resistance lines, right? So I've already made my support and resistance lines. We have a support over here at 33.19, and we have a resistance over here at 33.59, right? So this is basically what I was looking at the time. I seen that previously we had a resistance up here, and we had a support right here, right? So I got in, I made my support, and I seen that the stock hit this area over here. I made my resistance. So now this is basically giving me a channel in which to hold the stock with, right? So what do I mean by that? So now I got in at 11:56. The stock has not broken the new high, right? It hasn't broke the high of day at the time, right? So the stock instantly pulls back in, goes towards the support, but does not break the support, right? So this is how you have to trust the chart. I was negative at this point. The stock pulled in past the area where I bought, but I did not sell because it did not break my support. So this is how you stay consistent, right? So you trust the chart. It has not broken my support. Even though I'm negative, I am not going to sell because it has not broke the support, because I know that this is an area of problem for the stock, right? So it pulled back in. I'm negative on the stock. My student was a little bit worried. He's like, "Oh my God, bro, I'm negative." I'm like, "Trust the chart. Look at what's going on. Trust the news. What's going on? What's going on with the stock? It's positive news, so the stock should have more opportunity to go in, right?" Mind you, this is lunchtime. I normally don't trade around lunchtime, but I was doing live trading, and I believe that this stock had extra room to move forward, so I took the trade anyway with my student. So we're in the stock. The stock pulls back in on us, hasn't broken support, so we stayed in the trade, right? So as soon as it hit the support area, it starts to climb back up. Momentum starts to kick in. It breaks the resistance area. I'm now positive on the trade. Now, now I'm positive on the trade. Most traders would just stay in and ride it out, right? So now I'm positive on this trade. I actually take profits off. I take profits off the table. I pay myself. That's what a lot of traders don't do. They don't pay themselves when they get in the green. So now, God forbid, if the stock was to drop on me, I already locked in some profits. So I shouldn't hurt as much as I did before. I limit the load. So I stayed in the trade, and as you can see, the old support, old resistance became support. The stock took off, and as you can see, the stock took off. Let me zoom in closer, and we reached highs of 34.27. See what I'm saying? I took off profits, so I limit the load, so I'm in the trade longer. And this is how you stay in trades longer. I use a tier exiting system. Basically, as the stock is going in my favor, I limit the load, take off some shares. Don't worry if you're underneath the PDT rule. As long as you don't rebuy contracts or rebuy shares, this does not affect your PDT rule. So if you're underneath the PDT rule, you could still do this. You could still do the tier exiting system, exiting out some of your position to keep you in the trade longer. Because a lot of traders, they get in and they have what's called FOMO, the fear of missing out. They don't want to exit the trade. They feel like the trade's going to take them to the moon, and that's wrong. You should not think that every trade is going to take you to the moon. You should always pay yourself, and that's how you stay consistent. Trust the chart, stay consistent. I posted up the profits. Me and my team we actually killed it today with AMD. We killed the SPY. Follow me on Instagram at Wall Street Assassins. Message me if you want to get started on. We offer a one-on-one stock trading mentoring program. Also, be sure to like this video and subscribe.
Speed it up.